Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand the trading setup as well as the market strategies for the day. Remember, after an eventful session yesterday, the GIFT Nifty is now indicating a positive start for the Indian markets yet again. Remember, the Nifty is seeming like it's facing exhaustion at higher levels despite making new 2025 highs as of Tuesday this week. Now, of course, after yesterday's topsy-turvy trade, we did continue to hold on to 25,000 mark, but we are now approaching the monthly expiry and there could be some volatility on account of that. Profit booking ahead of the mega HDB Financial IPO that opens today is also not ruled out at this point in time. Now, remember, on the global front, of course, there are easing global cues, sharp drop in crude oil prices as well, and we are also looking at the risk on sentiment that's back on the day's trade. On the IPO front, if you're looking at the markets, then HDB Financial Services will kickstart for subscription today. It's planning to raise about 12,500 crores through this IPO, which will conclude on June 27. Of course, more details will follow through the course of our conversation today with our guests. And of course, we will be sharing all those brokerage houses updates that are covering this IPO too. Now, on the global front again, ceasefire between Israel and Iran announced by US President Donald Trump appears to be now holding on despite the Iranian missile attack and the Israeli assault on Tehran after the truce came into effect. Now, the bulls have a strong Wall Street session to take heart from. The indices that neared record high levels yet again. We saw gains of upwards of over 1% across the Wall Street last night. S&P 500 ending over 1% higher. Nasdaq 100 about 1.5% higher, with the Nasdaq also hitting its first record since February as well. Now, of course, Asian markets have been trading mixed. After the overnight session, we've been seeing Nikkei up about 0.07%. Broader topics about 0.1% lower in trade. You're also seeing Kospi down, but just flat with a negative bias. And, you know, the Chinese index is up by about 0.1% higher. Hang Seng is up by about 0.7% as well. GIFT Nifty is now indicating a start at 25,194, about half odd percent higher in trade. Looking at how the crude oil prices have been looking at slight muted trend, as we can see, around $68 a barrel is what we are back at. 5% down was the dip that we had seen yesterday, and it continues to be on a positive trajectory for oil importing countries like us. As far as the US Federal Reserve is concerned, the important statements that came in from Jerome Powell will also be impacting the sentiments across the globe. You can see that he's continued to hold on to the rates, and he's also talked about that if it wasn't for upside inflation risks, the policy rates may have been lower, potentially at neutral by now is what he's indicated. However, he did say that they are going to be choosing to wait for clearer economic signals, particularly the impact of Trump tariffs on inflation and growth. Now, let's welcome our guest on board who's just joined in, Mr. Gaurang Shah. He's the Senior Vice President of Jojit Investments, now with us on the program. Warm welcome to you, Gaurang Shah, and thank you so much for taking the time out. I want to first begin by understanding from you, how are you looking at the texture of the domestic market? Is it seeming like the Indian market is coughing at every sneeze that the US has, and also bends at every stick of crude oil momentum as well? We're again seeing these geopolitical wars now finally easing out. How are you looking at things?
Thank you so much, Sakshi, for having me on the show. Good morning to you and all the viewers of BTTV. I still believe that the situation is very fragile and liquid, to be very honest. Irrespective of what Donald Trump, President of United States of America, is saying. And there was too much of flip-flop yesterday, if you actually go to see. Morning, it was a different story that he was telling the entire world, Mr. Trump. Afternoon, it was totally different story, and by evening and late evening, it was altogether a different story. My sense is that it is good to see that the truce is holding out, Sakshi. But how long it is going to stay this way is a big question mark, because I think, according to me, whatever limited understanding I have of this situation in the Middle East, the damage that is done, Sakshi, is, according to me, beyond, it's irreparable. And any misadventure from either side or a third party whether it is Houthi or whether it is Hamas or whether it is Hezbollah, any kind of misadventure, which I strongly believe that given the capability of thinking and rational approach in that part of the world, it lacks to a great extent. Fanatics is the right word if I can use that. So any misadventure would again lead to a serious consequences. So let's hope this holds out. Good part, like you rightly mentioned, crude oil at levels of 2002 August, such kind of correction we had seen. So it's almost about 3 years, Sakshi, that we are seeing this kind of correction. Good to see it at 65 and 60. Maybe it might go below this level also. As far as our markets are concerned, I think the flip-flop that happened yesterday was to a great extent because of the news flows that were flowing in. Morning, it was a different story in our markets. By halfway down, it was a total different story, and by the time we closed, it was a different story. Let's see how we are able to manage this news flows. But my sense is that despite all this thing that has happened, Sakshi, we are holding out pretty strong, and the market and the screen is trying to tell you that. I mean, we did not break 24,800 day before yesterday. The low that we made yesterday was 24,824, and from those levels, day before yesterday, we close to 25,000. And then yesterday, we all know how it started off 25,200 plus, and then close to 25,050. So my sense is that now it's going to be still a range bound market, but I think the higher highs that we are making, Sakshi, are testimony that possibly if things hold out well in the global arena, nothing is wrong. Absolutely nothing is wrong as far as domestic data points are concerned. Everything is positive. And more importantly, Sakshi, this is the first time after a very long period, the fiscal and the monetary policy are in sync with each other. They are going in tandem with each other and supportive to each other. I think this is a big positive takeaway that we should take home. Only one thing is there, possibly 10th, 7th or 10th of July, or maybe 1 or 2 days after that, we'll have the curtains raiser for the first quarter earnings this financial year. If that is stable, I'm not saying extraordinary or very good. If that is stable, better than what we delivered in fourth quarter last financial year, then I think we should see a breakout of 25,200 above those levels, and possibly we are able to sustain over there.
Okay, got that. So, beyond the noise that we are looking at, things will be back to business, and of course, we will be back to looking at how the fundamentals of the companies listed on the exchanges are proving themselves in the Q1 quarter as well. But let me just ask you one more question when it comes to the diversification of the asset portfolio of investors on oil, on gold, on silver, on currency, vis-a-vis the markets. Is your fresh approach changing a bit? Are you consistent with that approach of continuing to be big on the markets as well as a well-diversified portfolio? Are you going to make any changes on that front, sir?
No, Sakshi, I don't think we should do a flip-flop when it comes to these kind of events. Uh, if these events have a durable long-term impact on global markets and our markets, I think then you need to change your approach. But if you do a flip flop like this, then I don't think you will end up being a successful investor in either of the asset classes, whether it is precious metals, gold, silver, whether it is mutual funds, or whether it is equity market. If you do a flip flop, depending upon which way the wind flows with respect to geopolitical situation, I'm 100% sure you're going to fail because you're not able to get the direction of that wind, which way it is going to blow. So instead of doing that, give it time, understand what is happening, and in case if it is having a long-term, durable, negative impact on such asset classes, then I think you need to rethink your investment strategy. Otherwise, stay put.
Otherwise, stay put. All right. We already have the pre-open ticks, but it's rather on the negative side. You can see a 40 point of a dip, but we are holding on to the 25,000 mark. Let's see whether this improves for the better in the minutes to come. By 9:07, we will finally get to see how the pre-open has settled in trade. Let's talk about a few more pockets. You did talk about the fiscal as well as the monetary policy now in sync. We also have the news of Reserve Bank of India now conducting a 1 lakh crore rupee VRR auction on Friday to mop up higher surplus liquidity in the market as well. So that's the clear focus that our own central bank is really going with. We've already had a slew of rate cuts that have come in. We have data supporting the sentiments as far as the inflation is concerned. And now with the crude oil prices also ebbing lower, the future risks also seem limited as far as the upside is concerned on inflation. How do you expect this aspect to move forward and to continue to provide for a fillip to the growth as well as to the demand scenario, sir?
So, Sakshi, like I mentioned in my opening comments regarding the market outlook, and one point I made was that after a long time, fiscal and monetary policy are going in tandem with each other.
Yes.
And I think whatever statements were made by the Honorable RBI Governor in the last credit policy meet, one thing is absolutely clear. Uh, the change in stance, the quantum of rate cut, interest rate cut, and the content of CRR cut. Uh, Look, one thing is always clear, Sakshi, that if there is any excess liquidity, then RBI will be proactive in terms of sucking that excess liquidity out, because you don't want to flush the system with excess liquidity. That leads to some misadventure by some companies who are involved into lending. Even there, the unsecured loan I'm talking about, which the RBI took appropriate steps and plugged the loopholes and took action against such entities, I think it was very, very appropriate. So I don't think that the system or the markets would be starved of liquidity. There is plenty liquidity, there is no doubt about it. And you mentioned about the HBD Finance IPO. I don't think there's going to be any serious impact, Sakshi. Like I said, there's a lot of liquidity. People used to be worried about earlier that secondary market liquidity will be sucked out and put into good primary market IPOs. Last 3 years, we have seen the number of IPOs that have hit the street with the kind of capital they have, chosen to raise from the market. Absolutely nothing has happened to the secondary market. Secondary market has survived. Primary market has also got good subscription when it comes to decent valuation and sound businesses. So I don't think this IPO will have any kind of liquidity vacuum sucking kind of an impact on the secondary market.
So, Mr. Shah, have you also come out with a note on HDB Financial IPO? What are you telling your clients? So, retail investors who already hold HDFC Bank in their portfolios as of the record date will have two choices of applying this IPO with, like, from the retail category as well as from the shareholder category as well. They may be looking at higher chances. Those who are young investors who probably missed out on the time when HDFC Bank itself came out with an IPO and got listed may now be looking at this as a fresh opportunity. How would you expect them to go forward, sir?
Well, so, Sakshi, again, it's good to see the millennium or the young ones coming into the IPO. Sakshi, give me a minute. I'll just come back to you. Give me a minute. Give me a minute.
Absolutely. So we will actually in the meanwhile just tell all our viewers about what HDB Financial IPO details are. Remember, it's a 12,500 crore rupee IPO with a price band of 700 to 740 rupees per share. Remember, this 3-day issue that opens today, closes on June 27, includes a 2,500 crore rupee of a fresh issue and 10,000 crore rupee of an offer for sale as far as HDFC Bank is concerned. Despite this offer for sale, and after that, HDFC Bank will continue to be the largest shareholder, hovering with a stakeholder of about 74% odd in the company as well. Remember, what we are already seeing is that the grey market premium, just for an understanding to all our viewers, even though we don't track it very closely, is up nearly 10%. So it's indicating a positive listing. Mr. Shah is back with us. Mr. Shah, you were talking about HDB Financial IPO, the opportunity that exists for retail investors.
Well, yes, Sakshi, sorry about that. That was an urgent call that I had to attend to. Apologies
That's
for
not
that.
at all a problem.
Look, we have not yet come out. I don't think now is the time to come out with a IPO note. It is already, I think we should have come out with the note earlier. But anyways, our team has not given such IPO note in terms of any kind of advice whether to subscribe. Not, and let me give a disclosure before I go any further. I missed out in the earlier part. Whatever recommendations, investment related recommendations, that I'll be giving are part of our research team views. Our company, Geojit or myself, we do not have any investment interest or any financial interest, nor any kind of conflict of interest, but we give similar advice on similar lines to our clients. They might have their investment position in the stocks that would have been recommended. As far as HBD is concerned, look, it is a sound company valuation wise. What I hear on the street is that it's a decent valuation. What I hear from the investor community is that there is a lot of interest. Uh, and one thing is there that HFC segment, that is housing finance companies, we like this segment, to be very honest. We have coverage on LIC and Canton Homes. Repco Home Finance is the other one where we have a coverage from a long-term point of view from our research team. So the sector looks attractive. The pedigree is excellent. Absolutely no doubt about that. Opportunity in terms of loan book growth on fallback of what the real estate sector is doing augurs extremely well. Interest rate cut scenario, one of the top beneficiaries are housing finance companies, Sakshi. I won't give any specific to subscribe or not since we don't have a recommendation via IPO.
And sir, if I have to ask you, so there are limited funds that are accessible to retail investors. If one has to choose between the parent and the subsidiary, how does one go about?
Sakshi, sometimes you have a capability of putting a gun on my temple and putting me on in a situation where it's on the one side there is deep blue sea and other side there is an ocean on fire. Uh, well, I won't be able to give any comments on HDB because we don't have coverage. But yes, to answer your question, HDFC Bank. Look, this bank has got a historical proven track record, Sakshi. It long-term investors, you take 5-year, 10-year, 15-year, 20-year, return record that HDFC Bank has created. It has always been a wealth creator. And as a disclosure, our research team has a positive coverage on HDFC Bank. And I don't think, Sakshi, we can compare both HDB Financials and HDFC Bank. I think it's not a peer comparison. It wouldn't be appropriate on my part to do comparison between the both because both of them have a different set of business altogether.
Okay, fair point. Let me just quickly go back to the markets. They've settled in the pre-open and we'll continue our conversation. Higher in trade, 106 points higher as far as the pre-open is concerned, 25,150. That's what is being indicated as far as the opening may be seen today. All the sectors could be opening higher with oil and gas, metals from the commodity basket showing some strength. On the Nifty, you could probably look at names like Hindalco, Geo Financial Services, M&M, Bajaj Finserv as the names that could be in focus. Within PSUs. It could be the power names, PFC, REC, OMCs as well as the upstream companies as well. You could also be looking at some railway counters that could be continuing the momentum too. So that's what is being indicated in the pre-open trade. But we'll come back to our conversation with Gaurang and understand where exactly, Gaurang sir, are you looking at for opportunities for the second half of the calendar year for retail investors? Are you shifting some themes, sectors and including some others at this point in time?
Well, I think defense related, power related, capital goods engineering, to a certain extent, maybe cement, Sakshi.
Okay.
Look at sectors which are relatively, insulated from the uh, external global shocks that we are getting till some time. Telecom is the other one, Sakshi, which is relatively insulated. So my sense is that these are some pockets where you should possibly look at.
Sir, so you would stay clear from, say, an IT and a pharma. How are you looking at those? Because after the geopolitical tensions, within a few days, we will get some clarity as to whether it's done and dusted and put on the back burner. The next big trigger for the markets will be the tariff deadline that you talked about as well, July 9, that we are all looking at. So how would you look at these export-oriented sectors? Pharma on the one side is looking at, tariffs never seen before or in the words of Donald Trump, IT again is looking at the slowdown concerns that continue to persist. Federal Reserve Chair has consistently talked about they will have to see the impact of tariffs on the economy and on inflation as well.
So I think, Sakshi, again, it totally depends upon what is the risk appetite of an individual.
Yeah.
Uh, in case if you have a low risk appetite, then my sense is that you should possibly stick to the sectors that I've mentioned. And just in case if you have a higher risk appetite, then I think my sense is that you should look at export related sectors, because that will create a fantastic opportunity from a long term point of view, because somewhere you will have uh, you know easing of situation, which may lead to uh, these sectors performing well. But again, it totally depends upon the risk appetite of clients, as I mentioned.
Okay, fair point. We will definitely look at that aspect. Let me just come to you on some of the other sectors. I talked about the pharma space, sir. Why am I also going to be focusing a little bit more on this space right now is that recently we've got to see the news that Amazon is going to be foraying into the diagnostic space with at-home diagnostic services now being brought in. We have already seen interest of Amazon earlier as well on the home delivery of medicines that they are looking at, and various aspects of pharma and healthcare that now they are foraying into. We did see also over the last 2-3 weeks, a month, the diagnostic space stocks also lose about 10, 12, even 15, 20% kind of a stock value as well. How would you look at a large player, global conglomerate like Amazon foraying into this space? What could be the impact?
You're referring to quick commerce, Sakshi?
Yes.
Well, we discussed it. I don't think that it will create much of a turbulence, because Swiggy and Eternal are established players. As a disclosure, our fundamental team has coverage on Zomato, that is Eternal from a long-term point of view. And I think there is enough place for a lot of companies to coexist together. Why is Eternal or Zomato? Because they are trying to enter into new geographies, and they are possibly in line as far as uh, opening of new dark stores are concerned.
How about Amazon's foray into the diagnostic space, sir? The at-home healthcare services that they're going to be deploying soon. Is that a threat to the existing brick and mortar diagnostic chains?
Well, Sakshi, again, these kind of things were already uh, in line uh, since COVID time, right? We already had these services going on. I don't think it's anything new that we need to worry about, right?
Okay, fair point. We will now look at the markets quickly. The markets have started to tick on a higher note. 25,150 is with us right at the opening tick. You are seeing all the sectors barring slight losses on private sector banks that are up into the green. Consumer durables are higher by about 0.6%. You can see oil and gas up by 0.7%. Infra stocks, broader markets, small caps and mid caps are higher. Even IT is up by about 0.5%. Metals, auto, realty seem to be opening higher as well, with the lower gains that you can see across the banking space, financial services, and the private sector bank, which is toggling between the highs and the lows at this point. On the Nifty, you have Titan as the top mover, 1.5% higher. Brokerage houses focus there. Adani Ports is up by about 0.5%. NTPC, L&T, these are the other names that are hovering higher. On the lower end, you just have a handful of stocks, just about 3-4 stocks that are lower. ICICI Bank, Kotak Mahindra Bank, SBI Life seem to be on the lower end. PSU stocks are higher by about 0.3%. NTPC, Power Grid both up in trade. Oil and gas names, HPCL, BPCL, IOC up. You can see even GAIL ticking higher. And then there is IRCTC, RVNL from the railway pack that's up. From the F&O space, again, it's Mahanagar Gas. Indian Hotels also up. Remember, there's a brokerage house reports there, which we will highlight for all of you as well. That's the setup looking like. Let me also pull up the Nifty 500 names. Any key name that we must mark for all our viewers with strong momentum. that can be seen. Maybe just a moment, a few minutes, and then we will be able to see some more stocks ticking higher. BLS Services is up, 63 Moons Technologies is up, Merck Electronics is higher in trade. We also have names like India Mart Intermesh again on the brokerage houses radar. These are some names. In Swift Limited, that's also up in trade. Very few far between names that are higher in the broadest index as well. Gaurang sir, markets have opened higher. 25,150 is now with us. You did point out that it could be volatile for some more time till the time things are settled as far as the geopolitical concerns are seen, but everything might just depend on the Q1 earnings to see whether the trajectory for Nifty goes higher. What are the chances you're penciling on that in this calendar year itself, we will be not just able to retest the previous highs, but also probably crossover?
Okay. Sorry, Sakshi, can you please repeat?
Yeah, I just wanted to talk about the markets have opened higher. In case you could share an outlook on the markets now from 25,150, how soon do you really expect the markets to scale the previous highs, sir? Is it going
No,
to
I
take
don't think
some more
Sakshi is
time?
going to be. Sakshi, look, it's going to be difficult. We are in very uncertain times, and in uncertain times, it is very difficult to give a precise direction on the market. But my sense is that if we take off 25,200 above those levels and give a closing decisively, and if we don't have any negative news flow on the global front, then I think we are possibly uh, placing ourselves to move up. What kind of levels? Again, I will not venture and give you any kind of levels because of the uncertainty. But more than the range bound market, I think you have a lot of sector and stock specific moves. I think we need to concentrate over there.
Okay. Consumer durables ticking higher now, almost 1% higher, largely led by Titan as a company. That's one stock that I want to discuss with you, Gaurang sir. And Macquarie has come out with an outperform rating here. 4150 is their target price. They believe there is a healthy demand that's going to be aiding the Q1 jewelry segment. They also believe the EBIT margins have probably bottomed out as far as FY25 is concerned. They expect a 20% growth in the jewelry sales and EBIT in Q1. What's your sense on Titan? We've seen the gold prices also slightly ebbing lower. Any expectation on Titan going forward?
Well, on the fundamental side, our research team has a coverage on the positive side on Titan. And I think more than gems and jewelry, they've got a lot of other businesses. They've got wristwatches, they've got eye care, they've got premium platinum segment presence in the form of Carrot Lane that they took over some time back, Sakshi. And I think they've got backpacks, accessories, perfumes, personal care products, which augurs extremely well. So it's a diversified contribution that comes into the balance sheet for Titan.
Okay, fair point. Let me also just ask you on the railway related stocks. How are you looking at that? RITES today has got a 28, 29 odd crore rupees order. That's in focus. You can see momentum in IRCTC, RVNL. The rest of the railway stocks are also moving up. Any key triggers that could sustain this momentum, or is it going to be a long drawn move, sir?
No, Sakshi, we don't have coverage on these, so I won't be able to give.
Okay, so railway stocks are
But
not on coverage at this point. Let me also
yes,
talk about the hospitality space, Mr. Shah. How are you looking at
I'll call you
the
back. I'll call you back.
space stocks like Indian hotels, ITC hotels, Lemon Tree? Summer vacations are on. People are planning their vacations at this point in time. But the stock prices have rather been lackluster over the last couple of months on the hotel space. Today there is a brokerage house report that's given again a positive coverage on Indian hotels. What's your sense on the entire space and your favorite stocks from this basket?
Well, not my favorite, but my research team has coverage on Indian hotels in the hospitality sector. And we believe that next 2, 3 years there are a lot of new properties that hospitality related hotel companies are likely to open up, and Indian hotels also given out an elaborated plan in terms of capex.
Okay, so that's the hospitality space for you. Um, Let me also talk about names within the brokerage houses and the capital markets related stocks. MCX is in focus, by the way, from the exchange stocks, about 2% higher as far as the broad in the FNO segment is concerned. That's in focus. BSE slightly coming out from that move that we saw as a knee-jerk reaction to the decision made by SEBI to allot Thursdays as the expiry for BSE. We are also looking at across the board now momentum continuing on CAMS, CDSL, gradual and slow. Exchange related stocks, how are you looking at BSE, MCX, sir?
So again, no specific on BSE and MCX, but we like the Indian capital market sector, Sakshi. One company that we have coverage is CAMS, Computer Aided Management Services.
Yes.
This is something that our research team is positive on.
Okay, so CAMS is something that Mr. Shah is focusing on. The research team of Geojit has a coverage there and is positive on that as well. Let me also welcome Kiran Jani, Head of Technical Research at Genam Broking, now joining in on the program with us to help us with the technical view on the markets. Kiran, approaching the monthly expiry, it's been rather a tough series to really see for the market struggling to continue to hover around 25,000 and move beyond. Any suggestion on how should one approach the expiry? What is your expectation on the Nifty and the Nifty Bank?
Very good morning, everyone. So overall, as mentioned that yes, the June month being very volatile, we have a lot of international cues where market disturbed overall rally. But if you look at the on domestic side, we don't need to worry about domestic side. Secondly, if you check the technical chart, those are also are very good and in this in mean of setup and everything is in bullish only. Coming to the level wise, Nifty, if it is not breaking below 24,500 at 24,500 positionally, and for trading perspective, 24,800, this both are the level where you can keep your stop losses as per your risk allows you, or you use the strategy buy on dips with this both level as a stop loss. And looking at monthly expiry, yes, definitely monthly expiry will remain in the range of 25,000 to 25,200. We are not expecting market to cross 25,200 as there is a maximum call open interest is being visualized over there. Secondly, on technical setup, we can see a gap down support towards 25,200. So that would be the major resistance. If yes, today or tomorrow price is closing above that level, then we can expect some short covering rally in coming month. But yes, in July month, we are expecting market to cross that level. And in July month, we can expect 25,500 to 25,700. Coming to the Bank Nifty is fairly strong than the Nifty. No doubt about that. 55,800 was the cluster resistance. Now it is given a multiple closes. So any dips towards that level, again a very good buy. Keep a strict stop loss below 55,500, and we can expect 57,000 plus kind of a rally in July month. And within the Bank Nifty, SBI, Axis Bank is our preferred pick. So coming conclusion in summary, buy on dips would be the strategy. 24,800 would be the trader stop loss. 24,500 would be the investor stop loss, and 55,500 as a Bank Nifty positional stop loss. You can go long.
Okay, fair point. We'll also get back to our conversation with Mr. Gaurang Shah. Gaurang, you did mention from the e-commerce space about Zomato and Swiggy. Delivery is picking up pace. We are also seeing some upticks on Nykaa as well. There are brokerage houses that are looking afresh at both these companies, yet again after a long haul of underperformance that they have displayed in the markets after getting listed and volatile times. Has anything changed for you as well as the company, as far as these new age tech companies are concerned, Delivery and Nykaa?
That the demand from e-commerce for logistics support is growing extremely well. Very recently, our research team has come out. We have initiated an accumulate stance on delivery from a long-term point of view on the fundamental side. And I think with this entire roadmap, elaborated roadmap as far as logistic-related corridors are concerned that Mr. Nitin Gadkari, Honorable Minister Mr. Nitin Gadkari has spoken about, is also shaping quite well. So what happens is your turnaround time becomes much faster than what it was otherwise earlier with limited kind of roadmap in front of.
Okay, fair point. I hope this has also helped all our viewers understand what other stocks within the e-commerce basket and the new age tech space is on the radar for Mr. Gaurang Shah there. Let me also pull up the consumption space for you. Gaurang, how are you looking at the consumer durables, big consumption theme? Is it going to come back into focus?
Well, I definitely feel, but the only thing is that this time, there was a lot of noise on the street that the summer was short. Well, it was blessing to a certain extent, and but maybe not so much positive for the consumer durable appliances company, for example, AC and coolers manufacturing company. But it's actually one has to look at the hardcore reality that is in front of us, that global warming. You require AC 24/7 and mostly throughout the year, except if you have a very favorable winter season. Otherwise, for 9 months, you definitely need AC, whether you are in your
Yes.
office, whether you are at your home. One more example I'll give you, Sakshi. We're just trying to correlate these two things. Gurugram was in news because DLF sold 11,000 crore worth of projects in a matter of 1 week time. You have people who are capable of absorbing this kind of supply at this kind of valuation. I'm sure they will at least purchase couple of ACs for their home. So you are going to see demand coming in from there as well. Rural and semi-urban in India, which used to be traditionally aspirations were skewed towards fans and coolers or other related blowers. Uh, Even there, I think the demand has moved to the next level in terms of entry level ACs, whether it is window or a split AC. So semi-urban rural India is supportive. We have coverage on Blue Star, Voltas, Havells India amongst the consumer stroke white good appliances stroke electrical peripherals.
All right. Well, on that note, Mr. Shah, many thanks for being with us on the program and sharing all your insights, valuable insights that you always share with our viewers. Appreciate your time, sir. Thank you so much.
Thank you, Sakshi. All the best. Bye bye.
All right. Kiran, we'll continue our conversation with you. Any suggestion on the consumer durable story today? That one is taking about a percent higher for the index, largely, of course, pulled up by Titan. What's your call on Titan? And, of course, the rest of the space as well. Anything else also looking promising?
So if you're coming to the consumer durable, there are multiple things to be fold out. Number one, FMCG has not been given any such kind of a return in last 1 or 1.5 year. Now this year, we heard from the budget that 12 lakhs would be the tax-free income. So whoever has an income from 7 lakhs to 12 lakhs, they are going to save the tax. Now, whatever the tax they are saving, either it's going to be in consumption or maybe in equity market. So for both of this sector, we can see some good fundamental tailwinds are there. Now, whatever the money is going in consumption, what kind of consumption people will do? They will definitely not going to do consume in your regular daily routine things, but something like a luxury thing. Whether you talk about jewelry, whether you talk about auto, so such kind of a thing we are thinking that it may be in play in upcoming time. So Titan is definitely a very good pick out of that. No doubt, gold prices is trading it somewhere around 1 lakh rupee. But overall, if you look at the COMEX price chart, there are chances of some correction. And if some corrections happen, people will start buying gold again. Number two, now festival and marriage season again going to be started after the August month. So this July and August probably were lackluster for the gold prices, and during that prices coming down. Definitely from August months we can see some jewelry buying is also there. So Titan for gold per se definitely can be lucrative at even current market price. Any dips toward 3,500 would be the great buy. Keep a strict stop loss of 3,300 as a positional stop loss, and we can expect price target of 4,000. Number one. Number two, now coming to the normal FMCG stocks. The normal FMCG stocks we can see like ITC, HUL, Nestle, Britannia, those are look very much promising. So out of those, our preferred choice is Britannia first, in Nestle, then ITC, then HUL. So people can definitely look around this.
Okay, fair point. I hope this has also helped all our viewers understand the consumer durables, the momentum that there is. I think broader markets are also picking up pace. Small caps are now higher in trade too. You can actually see a percent move on the higher side for the small cap index. Let's quickly look at the winners. India Mart Intermesh is over 5% higher. Again, this is one stock that has been on brokerage houses radar as well, and I'll just give out the details for all of you as to see what has been the key trigger behind this fresh move on India Mart Intermesh. And of course, this has been Nuvama that has upgraded the stock to a buy call. Target price that they have raised to 3,800 levels. They believe the company is entering into a new demand upcycle. Platform charges, increased marketing to boost unique inquiries and net subscriber additions is going to be looked at as a positive. They're raising FY26, FY27 earnings estimates by 9 to 10% on higher revenue growth despite lower profitability, and therefore a 5% higher move on this one. Let me also pull up some other stocks. KEC International, Sagility, Ramakrishna Forgings, Godfrey Phillips, First Source Solutions, Sonata, New Gen Software, a lot of mid-cap IT names that are hovering higher in trade. That's how the small cap index is right now placed. Kiran, first on India Mart Intermesh, how would you look at this first day of move after the brokerage house update, and whether this momentum will sustain, and anything of your choice within the broader markets too?
So coming to the India Mart, definitely this stocks was underperformed. It has given a breakdown from 2,900 and it went up to 1,900. From that level, it is started trading into the height of our bottom pattern, and recently, somewhere around 2,500, it has given a rounding bottom pattern breakout, which can lead to touch his previous level somewhere around 3,000. So definitely one can go long at current market price, or even at bottom, even at lower price somewhere around 2,550, 2,500. Keep a strict stop loss below 2,500, and we can expect some good amount of target, like a 3,000. One more stock which we are liking, that is a Dixon Technology. Dixon Technology, if you can see, there is a double bottom top pattern breakdown at somewhere around 15,000. From that level, it tested to 13,000 level, and from that it has given a decent recovery. Now today again it is trading at day's low, but overall the setup looks very much promising. Bullish harmonic patterns are visible with the bullish divergence, so there are very good chances we can see again 16, 17 kind of a target on Dixon Technology also. So one can go long on Dixon Technology at current market price. Keep a strict stop loss below 13,500, and we can expect price target of 17,000 for sure.
Okay, fair point. And let's look at some of the other names. So apart from Titan, even Kalyan Jewelers is picking up pace within the jewelry space, 3.5% higher from the F&O pack. It's on the move on the higher side. Let me also pull up some other names. FMCG names are also pulling up now. Nestle, HUL, they are up in trade within the FMCG basket. The index itself is also up in trade, about 0.7% higher. You can actually see Tata Consumer Products, Nestle, Godrej, HUL, Radico Khaitan, Britannia, ITC, Dabur, all of them showing us some momentum. Now, this has been the biggest laggard of a space, Kiran. We do know that nothing substantial has been seen over the last 1.5 years onto this space. Those investors who've been having a risk averse appetite usually look forward to hedging their portfolios with a lot of FMCG names. How would you look at FMCG, and what's the update here?
So as we mentioned about the FMCG, definitely one can go long at even current market price. We are expecting some recovery because we have seen there is no such result, or no such kind of a return has been generated past like 1 year. So ITC is one of our preferred choice at current market price. Looking at overall price chat pattern, it's look low risk trade. You can keep a strict stop loss somewhere around 400, and you can go long. Two more stock which we are liking. One is Britannia. If you look at the Britannia current market price, it is trading into, it is given a breakout from double bottom pattern, and then it is consolidating between 5650 to 5550. So any dips toward 5600 or even in current market price, you go long. Keep a strict stop loss below 5500, and we can expect price target of 6000. One more stock which is Nestle is also doing very well. It has also given a breakout from double bottom pattern. It is sustaining and consolidating somewhere around 100 days moving average, 200 days moving average. Recently, it has made a short bottom somewhere around 2300, where we can see multiple bottom with positive divergence. So keep a stop loss below of 2300 or below 2300, and we can expect price target of 2700 in shorter time. So Britannia and Nestle, definitely one can go long.
Okay, fair point. We'll keep an eye out on these FMCG names as well. The index is further picking up some pace. You can see the Nifty FMCG index now up 0.72%, and right after the small caps over a percent move higher. Consumer durables, FMCG, IT is picking up pace, 0.7% up. Let's focus on IT now, Kiran, especially the mid-cap IT names. They are the ones that are hovering higher. Names like Sonata, Newgen, First Source Solutions. These are the kind of names that are buzzing. Any suggestion on the IT pack, large caps versus mid caps? What would you prefer to continue to be with?
So large cap would be definitely the preferred choice over a mid cap because last rally we have seen that large cap was remain underperformed, but now I think large cap can perform. So there are two stock. One is Wipro and another is Infosys. So Wipro, if you look at there is ascending triangle pattern breakout somewhere around 250 from 250 to 267. Once upon a time, if I'm not mistaken, we also discussed this price, this stock somewhere around 250 only, and we have given a target of 280, 300. So now it is already been touched 270. Even at current market price, one can go long. Revise your stop loss to 255, and we can expect price target of 300 for sure. One more, Infosys looks very much promising. Recently, it came down, but overall chart pattern is very strong. One can go long at current market price, keep a strict stop loss below 1540, and we can expect price target top 1650, 1670 upcoming time.
Okay, fair point. Let's also look at some of the broader market names then what are moving up. You can see names like MTNL 11% higher, Arihant Capital Markets, the brokerage firm is up by 10%, Akums Drugs and Pharma is up 9%, names like Moltech Technologies buzzing 9% higher, Balaji Amines is also up, you have names like Bazaar Style Retail. You also have Sundaram Finance, names like Pudamji Paper, Indo Solar. These are the names that are actually buzzing in trade in the Nifty 500 basket as well. Anything from the broadest index that you're watching out for?
Broader index, if we can see, overall price chart pattern is very much strong, and we expect this rally to be led by the large cap name only. And we discussed the same thing also. Like say for example, in bank we are liking it, SBI and Axis Bank, so you can look on those chart. One more large cap stock which we are liking, that is Reliance Industries. Reliance Industries are also giving a breakout from cup and handle pattern at current market price. On any tips toward 1450 would be the great buy. Keep a strict stop loss below 1430, and there are chances we can see some 1500 kind of a target on Reliance also. So Reliance, SBI and Axis, you can check into your broader perspective.
Okay, fair point. Let's also look at some of the other pockets that are buzzing in trade and where we can take a view. Okay, from the F&O space, IEX is now jumping about 3% higher in trade. This has been a volatile space to be in, but at the same time, a lot of retail interest, Kiran, on IEX. How would you look at this stock perform? Do you think it's continuing to be in a volatile zone?
So coming to the IEX, recently we have heard about the power future and everything. So for that reason, there is some deep down some flash correction is also happened. But overall, if you look at the chart pattern, it has given a breakout of rounding bottom pattern and the falling trend line. Also now stock is back above its 100 and 200 is going average after long consolidation. Moving the momentum indicator is also gaining a momentum also. So definitely one can look as an investment, not for the F&O perspective, honestly speaking. So keep a strict stop loss below 170, and you can go long on IEX, not as an F&O but as an investment purpose. And there are chances we can see some 250 230 kind of a target in upcoming time.
Fair point. Okay. Nestle is the one that's moved to the top spot now on the Nifty, 1.8% higher, followed by Titan, Tata Consumer, HUL. You can clearly see the consumption space that's in the spotlight today, along with some IT names like HCL Tech. Eternal is also up by about 0.9%. Within the large caps, you have Reliance Industries that's up by about 0.7% higher in trade. Telecom names are higher. We've talked about MTNL in the broader space. Bharti Airtel from the large caps is up by about 0.6%, 0.7% as well. Let me look at the railway related names. Are you looking at that with a clear focus, or is it just something that you are looking at as momentary, Kiran?
We are discussing railway, right?
Yes.
So railway, it is into the sideways zone only. There are few railway stock which we are liking. One is a RITES and another is IRCTC. So this both stock you can look at even at current market price. If you can see RITES chart, it has given a breakout from double bottom pattern, retested, and now it's again started moving into the height of higher bottom pattern. And it is also above its 200 days moving average. So one can go long at current market price, keep a strict stop loss below 260 or maybe 255, and we can expect price target of 320, 325 in short time. So definitely rights is look very much. One more stock is IRCTC. If you
Okay.
look at IRCTC's current market price, it was trading into the falling channel. It has given a breakout of multiple bullish pattern we can see on daily price chart. It is also trading above its 100 days moving average, and we can expect some a good recovery on IRCTC, because if you have checked out last summer, everyone was traveling, everyone is posting their images for the holidays, and you see the Indigo is trading is all time high. So I don't think so that all the India is traveling by the air only. If I'm not wrong, at least I can say 70-80% people are still traveling from the railway, and that is not capturing by the stock price, which is something very hard to believe. So, considering at current market price, definitely one can go long, keep a strict stop loss below 700, and we can expect a good amount of rally in short time.
Okay, fair point. I hope this has also helped all our viewers take that aspect. Within the PSUs, how are you looking at the power related names, Kiran? Is NTPC or a power grid looking interesting to you, or would you probably look at the power financiers, PFC, REC? What would you do?
See, yesterday only NTPC has made a reversal candlestick pattern, so we will wait for some 1 or 2 days for the confirmation, or even today if price is closing above yesterday's high, then this will be considered as a reversal only. So based on that, this chart pattern, but definitely one can look for the NTPC at current market price. If it is closing above yesterday's high, then one can go long with the fixed stop loss of 320, and we can expect some good amount of rallies towards 360 through 370 in upcoming time. But honestly speaking, if you discuss about the power stock which we are liking, power distribution company like Tata Power and Adani Power looks very much promising at current market price. If you look at the Tata Power chart, it has given a breakout from rounding bottom pattern. Stock price is trading over its 200 days moving average with rising channel support. Momentum indicator is also into the bullish zone. So one can look for the Tata Power at current market price. Keep a strict stop loss below 390, and we can expect price target of 430, 440 in upcoming time. Similar chart pattern you can see on Adani Power also. No doubt Adani Power being high volatile, counter risk is always associated, but you can keep a strict stop loss below 550, 450, my bad, 540, and you can go long at even at current market price, keep a strict stop loss of 540, and you can expect price target of 600 for short time.
Okay. Within the renewable energy space, are you also looking at names within the ADA group as well? Reliance Power, is that something that you're looking at too? We have seen, stunning moves on the stock, but at the same time, the ghosts of the past can hardly be buried so soon from the investors who have held the stock from IPO levels, seen the worst, finally seeing some come back. But is the confidence returning to the brim that yes, things are, fortunes are changing for the group and for the company?
See, honestly speaking, as you mentioned, that many people are was interested in this stock, still interested in this stocks, our power, and it was a nightmare for the even Reliance Power when the IPO came in 2008, and whole story we know. Everyone has this case study. Now, not only Reliance Power but Reliance Infra, people are interested in this stock. People have invested in this particular stock, and recently, whatever the rally has been coming, it's a remarkable rally. Now, coming Reliance Power per se, it is trading above. It is like someone has to believe it is trading is above 12 years high. So, lastly, in 2013, the high was 60 rupees, and after that, first time now stock price on monthly basis closing above 60 rupees, which is a very good sign for this particular stock. If anyone holding this particular stock, we suggest to hold. Look, considering the current market rally or previous rally, stop loss are little bit wide and little bit big in terms of percentage wise. But I think one should keep holding this particular stock with the strict stop loss of 50 rupees. Considering overall chart pattern, you give at least if you are ready to give 2 to 3 years, then only you invest in this particular stock. If everything remain, because the price discount everything, and we believe the amount of volume is happening, amount of price pattern is showing us the interest of retail investor or maybe whoever invested in particular stock, they are expecting some good news, or probably they can expect some turnaround story can happen. So keep a strict stop loss of 50 rupees and hold Reliance Power. If everything remains same, you can definitely see 100 rupees kind of a target in upcoming 3 years.
Okay, got that. Towards the end now, Kiran, help us understand with the strategy till expiry tomorrow on the benchmarks, Nifty Bank, as well as any key stocks that you're looking at for the expiry play.
For the expiry play, I think Reliance should be the on the chart. We can expect some short covering rally on Reliance for sure. And one more stock, that is Paytm, for the expiry. It is trading at 900 rupees. One can go long at current market price with a strict stop loss of 880.
All right. Well, thank you so much, Kiran, for being with us on the program and helping us with all your views across the markets, various sectors and stocks that you've shared. Truly appreciate your time with us. Thank you so much for being with us on the program. 25,192. We're doing very well as far as the opening session is concerned. First half an hour of trade, and we are now moving towards the day's high, 0.6% higher, inching closer towards 25,200. Now, let's wait to find out whether this holds on into trade as well. Of course, Kiran has highlighted for you the strategy on the markets as far as till tomorrow's monthly expiry is concerned, and where he exactly feels the momentum could be seen in terms of the stocks that you could also keep onto your radar. What we will do is start winding up the morning edition of Market Today with some highlights from the markets for you. We've already marked out the Nifty for you. All the sectors are now into the green, led by FMCG, IT, consumer durables, infra, oil and gas, autos. They are all up in trade. In fact, India VIX is now down 2.5% at 13.3 odd levels. So, comfortable on the India VIX levels as well. Momentum stocks from the FMCG, consumer durables, we've already marked for you. On the Nifty, what's not doing well, you can continue to see some profit booking continuing on the defense pack. Since yesterday, we had seen some dips, and you can see BEL as the top laggard today, 1.2% lower. Kotak Mahindra Bank, Aisha, SBI Life, Axis Bank, these are all the stocks that are lower in trade. On the FNO space, MCX is the one that is higher, 3.5% to 4%. SJVN is also up in trade today. You're also looking at IEX. Then you're looking at Indian Hotels as some of the names which are buzzing in the FNO action. On the lower end, Dixon Technologies, HAL again from the defense pack, Siemens, BEL and Bharat Dynamics. So the defense space continues to see some profit booking for day 2 in trade right now. But the railway stocks is pushing up. When you look at the PSU names, you also have the power related names that are in focus: Coal India, NHPC, NTPC, Power Grid, Power Finance Corporation. That space is buzzing as well. Some of the Adani Group stocks are also buzzing: Adani Ports, Adani Enterprises. These are the ones that are holding up. Cement space stocks, telecom space stocks, those are the ones that are buzzing. On the IT pack, it's the mid cap IT names that are also hovering higher in trade. Alright, so we'll wrap it up on that note on the morning edition of Market Today. But what you should do is stay tuned with us throughout the course of these sessions. We will be getting you top market voices to guide you through various strategies on the markets. 12 noon, I'll be back with daily calls in case you have questions about the stocks in your own portfolio. What strategy should you adopt? Take an expert advice on daily calls at 12 noon. Send me your questions on the WhatsApp number that we keep flashing on our social media platforms. And of course, I'll be seeing you very soon. Stay tuned.
Explosions were heard across Doha on Monday as Iran launched missiles at a